After its highly anticipated meeting this week, the Federal Reserve has announced it is cutting interest rates by half a percentage point. And this is the first interest rate cut since the start of the pandemic over 4 years ago and marks the first step in reducing costs for borrowers.
And here to discuss what this means for your wallet is ABC News correspondent Elizabeth Schulze. I think we all know this is a big deal.
Yes.
But why is it a big deal?
We've been waiting for it for a long time.
Yeah.
So that's the one reason why we can say this finally happened. But, you know, it's a big deal because this is really a turning point for the Fed. We've been talking about how the Fed kept borrowing costs at 23-year highs for a long time. So if you were a borrower, you were seeing those costs go up and up for the past 2 years. Now the Fed is saying we're going to bring those costs down. And the reason I think important to remember why this happened, we were dealing with incredibly high inflation. Back in 2022, June of 2022, we saw inflation get all the way up to 9%. The Fed said that's a big problem for the economy. So it made it more expensive for consumers and businesses to borrow money because it wanted to slow down how much they were spending to bring down inflation. And guess what? That worked. Now we see inflation at 2.5%. That's closer to where the Fed wants it to be. The Fed in this announcement did go big. It decided to cut rates by half a point, and that really signals its confidence that it's pretty close to achieving victory in this inflation fight.
So what does this mean for people who are looking to buy a home?
Right. So one of the places where we've seen the biggest impact already of the Fed's moves is in the housing market. So if you think about mortgage rates, they're not directly tied to the Fed, but they're really closely linked. And those rates have been coming down already. So typical rate on a 30-year fixed mortgage now 6.2%. That is down from 7.9% around this time last year. I think it's helpful to put those percentages in dollar amounts for people who are in the housing market. Your $400,000 home, that's close to the median price. You are going to be saving hundreds of dollars on that monthly payment because of those lower mortgage rates. So $2,550 is your payment now. That's $427 cheaper than it would have been when those rates peaked. So that's why we care a lot about those borrowing costs coming down.
Yeah.
Exactly.
That's a lot of money for
It's a lot of money every single month, and that absolutely adds up. And that's why people who are in the market are watching those rates so closely.
Okay, so then the other things that we have to finance in order to be able to afford them, like cars, people have credit cards.
Yep. Big borrowing costs, and you think about your bills. Unfortunately, when you think about those, fortunately, I should say first, let's start with the good news. Those rates are going to go down, but the key word here is gradually. So the Fed is not just this one rate cut. It's indicating more rate cuts in the next couple of months too and over next year. And that's where you really start to see it add up on things like your credit card statement. If you're carrying a balance every month and you're paying interest, you should start to see those rates go down. Really important to remember, though, you want to try to pay that balance off as much as you can and always try to shop around. Try to look for lower rates. Call up your lender and your credit card. See if you can get a lower rate. Sometimes they'll work with you to lower it a little bit.
And ahead of this decision, the stock market was divided on what this cut should look like. So how is Wall Street responding?
We are seeing positive reaction from investors because they have been waiting for this move from the Fed. And now they say, OK, we're in this new phase of lower interest rates. And it's not just good for consumers, not just good for mortgages and credit cards. It's also good for companies. So if you think about it, small businesses, big companies, they're taking out loans all the time. And now those loans are going to be a little bit more affordable. Those costs are going to be less expensive for them. The goal there really is that if they can take out loans at a cheaper rate, they can keep expanding, keep hiring. And that's what the Fed is focused on right now. It says, OK, inflation, this big thing we've been focused on for 2 years, looking pretty good. Now we're thinking about the jobs market, and it wants to preserve what's a pretty good jobs market right now historically. So if companies can keep hiring, expanding, these lower rates should help do that. And we did get some good news this morning on jobs. Fewer people filing for unemployment benefits. So it shows that, yes, maybe hiring not as fast as it had been coming out of the pandemic, but stabilizing a little bit.
That is good news.
So I don't want to be a Debbie Downer, but so they cut it. That's a big cut.
Yes.
Should they have done this sooner?
It's such a good question. And was a really big debate on Wall Street. You know, is the Fed behind here? I mean, we've been talking about this and the need for those borrowing costs to come down for a while. And the question was, are they too late? We think about how much people were anticipating this. I was in the press conference with the Fed chair yesterday, and he really pushed back on this idea that they were too late. He said, that's kind of why we're going big and we're ready to take this on now. But he was firm in saying, we think that we needed those rates to be high for as long as they were because it was so important to bring inflation down. And the cost of high inflation, when you're thinking about those day-to-day products you're buying, we all have seen it with groceries, we know it with rent, we know with home prices still high. He said that's where ultimately we have to get that to a more sustainable pace. And the Fed chair told me the goal is to get back to a place where we're not talking about inflation all the time, where you're not thinking every single day when you look at your budget, how much is inflation going to affect what I'm spending? He wants to get back to that that world, still going to take a little
Try
more
and
time.
find balance.
Elizabeth Schulze, always so lovely to have you on.
So great to be here in person with you guys, too.
Thank you.
Thank you.